Now everyone, if a ex-president of Harvard University share with you that the market itself may continue to go down, what do you think? Apparently, there's an article from Bloomberg says that Larry Summers actually indirectly in my opinion, have said that there could be another wave of selling. And I did the mathematics. It is a possible of another 2,000 point downside for the Dow Jones if, let's say, you actually buy into his sharing, which I do. And because of that as well, right, today is a blockbuster must-watch video. So don't miss it, okay? Now, once again, before we start this session, alright, please make sure that your risk assessment has been done. Know your current financial condition before applying whatever I share. And thanks again to Ames for the kind sponsorship. Now, we all know that the Federal Reserve has been doing their best to reduce, but of course, look at the way they reduce is really laughable. Now, look at this. The last time we see a reduction itself was back in 2009, where there's some reduction here itself, and at the time we have the recession period, okay? Then, of course, the more significant one in 2018 to 2019, it was quite significant because that was what they wanted. And of course, the stock market came down by 30%. Then, because of the pandemic itself and the recession, they pumped it up all the way. Okay, so the point is this, we all know this. But look at the way it's coming down. It's really, really very slow. And of course, if you look at the numbers, the highest was 8.9 trillion. Today is at 8.7 trillion. Okay, it's nothing fantastic. But, before you jump in the gun, do you notice that from here itself, the curve got steeper as compared to the rest? That is where I'm going to come from. Okay, I'll tell you more in detail shortly. So what happened is that an analyst actually did a simple, what they call foundation of what may happen or what could happen, alright, for the numbers to move. Okay, in short, if let's say they want to reduce another $2.2 trillion based on the current rate, it will take another 3 years, oh my god, just to do 2.2 trillion. And the thing is this, that will bring the 10-year yield all the way up to 6%. Now, at the moment now, it's only 3.88%. So it has to go up to here. And we all know that the yield is inversely related to the Dow Jones at the moment now. So which means that if the yield actually goes higher, then the Dow will become lower, right? And if let's say the market enter a crisis mode, wow, that means that if there's a market keep on coming down or the inflation get really out of hand, then they have to really go with a 9.1 yield. That's the reason why some people are saying that it is possible to see 9. So of course there's scenario 2, there's scenario 3, whereby it take a longer time for them to do a bigger QT. But the problem is that, right, the crisis yield will be even crazier. So of course we look at the scenario 1, and I think that will be bad enough. Alright, so we all know that Federal Reserve have been saying non-stop they will shrink the balance sheet since September, July, and been saying that repeatedly. But at the moment now, we are only at 3.88, okay? We are nowhere near 6%. So the question is this, okay? If really Federal Reserve is going to do what they say, which I think they will, then what will happen to the equity market? So this is why I'm very confident that we will see the 4.5% coming in, right? I'm pretty sure this number will be matched by the end of this year. In fact, itself, right, I've been saying non-stop there will be a triple 75 basis point rate hike, and I've been spot on because now the numbers are showing that yes, indeed, the coming November bond itself, right, it will be a 75 basis point again. And of course, when all this happen itself, let's look at the stock market. Now look at the stock market, guys. Take a look here. The stock market, when it was up itself, right, you notice this, the yield was just at the lower bandwidth, and then when the yields had to move higher, you can see that the stock market came off. Pretty clear, right? Okay. So of course there was a period of time where the yield went up and then the stock market recovered, but you can see it's getting lower, so you cannot compare that. And when the yield continued to climb, the stock market caved in again. Can you see that? Okay, so this has been pretty consistent. So now it's clear. The yield has munched up all the way to 3 to 4%. And the stock market, wow, those dive all the way. So let's do a simple mathematics here itself. Let's look at the math here itself, okay? So this is the yield, okay? We have this is like 2.8%, okay? And this is like 3.8%, okay? 3.8%. So 2.8 to 3.8 has led the Dow Jones coming down that much. Okay, so let's do a simple mathematics. Here is 3350. This is 2900. Okay, so the difference, let's say we give it at 4,000 point. Okay, at 4,000 point. So 4,000 point equivalent to 1%. Okay, so what do you think, guys? What do you think? If let's say this number goes up by another 0.5%, meaning up by another 0.5%, which I told you that it will likely hit a 4.5, then by right, the mathematics will be down by at least another 2,000 points. Oh my god. Is this going to be happening itself? This is crazy, but it is really likely. Alright, so that's the reason why I'm sharing this with you, and it's a blockbuster sharing. Okay, so the thing is this, you can see right now, right, the Federal Reserve actually really started to reduce quite significantly. Look at it. There are people been asking me is why the market coming out so fast, right? I've been saying this for months and months and months. I say that once the Federal Reserve start to really reduce their balance sheet, right, the market will have problem. Now they actually said they'll reduce by $45 billion to $90 billion, and last week itself they only did a $37 billion, and we saw the stock market coming down below 29,500. So, and even the mortgage-backed securities from 2.7 trillion, it came down to 2.68 trillion. So it is actually happening right now, and it seems that the Federal Reserve is seriously very they're very determined to actually reach whatever they say, and this is quite scary for equity holders. But you must understand that the US debt clock itself is ridiculous. It's now at $31 trillion now. When I was covering this long time ago, it was like $24 trillion. Then it became $27 trillion. Then it became $29 trillion. Today is 31 trillion.1. But what is so important about this? Let me share with you in a short moment. The thing is this, we all know that this is going up, and that will give a lot of stress to this particular lady, right? And she's definitely stressed up. It's undeniable. Then the thing is that you can see on the article that people have been speculating that she could be leaving, right? But the thing is that on CNBC and Bloomberg, they say that no, she's not leaving. Okay, fine. If she's not leaving itself, then there must be something she must do, because this cannot be forever. So you remember this back in 2021 in December itself, right? The US Congress narrowly voted to raise the debt limit, and it was because of, obviously, right, the Democrats were upper hand. No one wanted it, okay, from the Republicans. So what is happening right now? They are saying that they allow it to increase to $3.4 trillion. Wait a minute. That means that it was 28.9 trillion just about 2 years ago, and today is 31.4 trillion as a limit. So guys, look at it right now. It's 31.1. That means we're just very, very, very close to the debt ceiling again. And seriously, it's right. If this is going to continue, this is not going to end. And I suspect that that's why Joe Biden may not win the midterm election. Okay, so this is where it gets very, very scary, and you just have to take note. And this is actually the latest update on the 10th of October as of today. Okay, very serious. So that is whereby Larry Summers came in and said that, okay, he urged the Federal Reserve to continue. Okay, let me just do something on this point here as well. Okay, do something over here. Done. Okay, Larry Summers urged the Federal Reserve to keep tightening even as collision it looms. Okay, collision. Okay. So the former Treasury Chief has said that it's important for the Federal Reserve to deliver, and other measures can be taken if mishaps occurs. Now that means that he expects things to get bad, right? And that's what he's trying to say. So this is him right now. This is Larry Summers. So he dismissed the argument that because of the longer term inflation expectation has relatively become stable, the Federal Reserve had to slow down. No, he said that no way. It's vital for them to follow through. And of course, he is a ex-Harvard University he is now, and he was an ex-president of Harvard University. So of course, this guy has his reason to tell you a lot of things, right? And he already mentioned that the September period, we saw a 363,000 job gain, right? Which I tell you guys, a higher job is not good. In fact, itself, I said this many times that the Federal Reserve really want the numbers to come off. So which means that if the employment data are coming off, example, if it happens, that means that we will enter recession. This is without a doubt. So that is the reason why I felt that, right, what Larry Summers said is correct. And he added on, he says that the economy now is way too strong, and we're headed for a collision, and everyone now expecting the fourth straight 75 basis point in November 1st and 2nd meeting. And of course, it could be another 50 point, right? This is what I also said. So he felt that he's quite aligned with these numbers and he thinks that it's appropriate, okay? And of course, the scary part is this. He actually mentioned during the Bloomberg interview, he says that, right, if this is to continue, okay, we could actually see what happened to the collapse of the hedge fund long-term capital management, remember? Because what happened was, back then, they kept the interest rate too low, and then they blew up a bubble, and then equity market shoot up, right, and that causes the technology mania, and again led to recession. So in retrospect, it means that, right, as long as the market do a low interest rate environment, and then a bubble blew up, right, in proportion, then of course the stock market will have to get hit. So he is saying that, right, it is very possible that things must happen, and he actually implied in a way indirectly that a stock market crash could be around the corner. So this is why that I will tell you that the 4.5% is really possible, and it will actually cause a substantial financial breakdown, which I've been telling you guys on this. That's why I say there's a chance of the Dow Jones going down by another 2,000 points. So that is pure mathematics. Okay, so we all know that Jerome Powell has already vowed to raise interest rate to fight inflation until the job is done. So it's incredible that the last 2 weeks I've been hearing people saying that, oh, okay, there'll be a QE coming in. There could be a chance of the QT ending soon. It could be a chance of this cut rate. You know, this is all rubbish. Jerome has already said just on the September the 8th that he's strongly committed to fight the inflation, and this is what the time is 2.25 to 2.5. Now it's 3.8. So the point is this: he has already said this so many times. I just don't understand why Wall Street keep on playing this, unless Wall Street is trying to tell the Federal Reserve that they are bigger, or the whole thing's a sham, and Wall Street is trying to fake people to go in itself, and then they dump to these people. Because look at this. This is the dot plot, right? Remember, the dot plot already said that many officials are looking at 4% and higher. This is really clear, okay, that they are looking at 4% and higher, okay? There's no way it can be lower for next year itself. So all this tells you that the Federal Reserve is determined. And of course, Michael Burry just came in and said this, okay, on the October 7th. The Fed is so afraid of being the Fed of 1970s that they are becoming the Fed of 1930s. So if you remember, in 1970s, we had the Paul Volcker time. So of course, Federal Reserve, we all know that Jerome Powell doesn't want to become like Paul Volcker. So what happened in the Fed in 1930 is that they allowed things to happen, and things got so bad itself, and we all have the recession and depression, in fact. So that's why this is a very interesting cartoon. I pick it up yourself. This is you in 2020. It was okay. 2021, the tidal wave got bigger. 2022 is like, wow, my god. And of course, if this will continue, then 2023 will be, oh my goodness, it could be a Godzilla effect. So this is just a joke itself, but I think that we're going to see the movement starting from now, 2022. And this is why traders should be very, very careful. Now, of course, I know that I've been advocating this guy, Tom Lee, last year, 2021. He was perfect. He was spot on. I've been talking about this. But in fact, early this year itself, when Tom Lee says that he expects the S&P 500 to hit 4,008 to 5,001, I start to think that I don't agree. And in fact, I said that I don't think so. I think that if the market doesn't really support itself by June to July, then it could see further downside. Because I also said that maybe the next 6 months after July period, the market will recover. I did say that. But as the time goes on from January to March to April, I know that something is wrong already. Something is very, very wrong. So of course now is that if you are still thinking that the market will go up itself, right, I'll ask the first question to you. What make you think that the market will go up, right? Because now the global financial system stress level has had to hit 1. Now the last time we see this was back in the pandemic time. We see it back in 2011 time, and of course we see it during the Lehman Brothers time. And every time when this happens, right, the stock market will go down by at least 30 to 37%. Oh my god. So what do you think, guys, now? Another 10% is possible? It is possible. For the Dow Jones down only 20%, it is possible. And that is whereby Bank of America is coming out with these statistics. Now, most important is the buffer indicator. Look at it now. Remember when it was at 211, I tell the whole world, said that get out of the stock market. And the time the Dow Jones had trading at 35 to 36,000, and I said that no, this is going to break. now indeed the way it come off is like a straight line. It's faster than a speeding bullet, guys. So this is actually bad, because if you last saw it itself, right, that was during the stock market crash in 1974. Okay, remember that? And this was what happened back in 2001, where the stock market came off in a very fast speed. So now the thing is this, we're 22, and I suspect that this is going to break further, because earnings is going to come out this month, and it's really impossible for this month earning to be better than last quarter. And of course, most important thing is that the projection will be worse, right? The projection will be worse because the interest rates are going up. So what do we need to look out for, guys? This is going to be important and crazy. Please take note now. This is very, very, very important. Now today there's no earnings, don't you worry. Tomorrow nothing much itself, but on Wednesday we have PepsiCo. Okay, still not too bad. On Thursday we have Delta, BlackRock, and we have the rest. Is like not that fantastic. But the one, and this is going to be the crazy one, that will be on the 14th of October, but before the market open, we have JP Morgan, Morgan Stanley, Citibank, Wells Fargo, all coming out to give their earnings. And I can tell you this, most of the analysts are giving very low rating, or they expect that there will be more problem coming up. So watch out for this. Now 14th October is the day whereby the earnings will come out before the market starts. So that means that from 13 or even 12 of the month onwards right now, you should be watching the market, because I suspect that the market will sell before it, right? And then of course they'll harvest it as the price goes lower. Okay, so watch out for this. This is not a joking matter. That's the reason why I said that you must be careful. This is going to be a crazy time. All right, so hope you like this, all these fundamentals, right? Let's look at the chart for today, shall we? Okay, let's go. Now, first of all, we can see that this is my KFC on my Dow Jones. Nothing much to explain to you. Just watch out for the potential turn date or flip date on November the 1st. Okay. Then for Nasdaq itself, oh my God, it has broke below my it broke the 11,369 support level on Friday. Hence, therefore, I suspect that it's going to test this number again, and that's 10,830 level. Okay. And of course, we have the gold market. Gold has strongly resisted. Okay, you can see that 1726 is a strong resistance, and really fundamentally it should be down. So I suspect that this is the gold will come down all the way to 1660 again. Okay, I suspect that gold will come down to 1660 again. Okay. And for Hong Kong, well, it's coming down to retest the support level I mentioned as 17,252, and if we close below this figure, the next target will be easily below 17,000. Okay, so once again, guys, this is my KFC. Okay, look at the China market. Oh my God, this is drastic. Look at China. Now I already told you guys that if China cannot break my China A50, sorry, cannot break my trend line here itself, right, it will sell. And I told you before, using a simple Fibonacci itself from the highest point to the lowest point. All right, let me just do it for you properly. Okay, you can see that now. If the market breaks below the 50% mark, which if in fact coincidentally itself, right, was the MA30. So when the market this today touched the MA30 and failed and broke below the 13,000 psychological level, wow, look at the selling. The market has dropped so much. It's more than like probably 2% or more. Okay, and this is going to continue. So that means that the next target could be all the way to 2,636 level. So again and again, if China market is not performing despite that all the pump up by their own government funds, then I can tell you this is going to go for the break, and this will have a spillover effect to the US market very soon. Just watch out for this, okay? Not kidding matter. Alright, so let's just look at the market right now for the Dow Jones for today using the TWB system. Now, first of all, today we have a combo whereby it's a CCYR for the day chart, and he has lost is now trading below MLP and below MA30. But the KSI and KRW has both flipped red, so which means that if the market stays below OP of 29,218, the first target will be 2,774. Okay, so of course this is the first target, and if it's continue, it may go down all the way to even 27,543. Now, of course, do expect some intermittent resistance. This is very expected, yeah, from the market. But the downside, in my opinion, is unavoidable. Okay, it's gonna come in. Now, Nasdaq also had the same thing. The Nasdaq has the KSI and the KRW all turning red at the same time. So that's why the arrow is there. And of course, it's now trading below the pivot one at 11,042. Now, of course, if the market can go above this figure, the market will go up. But if the market fails to stay below OP, then the first support will be at 10,831 level. 10,831. This is the BNB SL level. S&P 500 also have the same thing. It's a KSI and KRW both turning red, and what we have right now is the market trading below MLP, right? So which means that the first target it will go is a BNB SL level, and that is about 35.58. Okay, 35.58. So with all these numbers, it seems that there could be another 400 to 500 points downside potential on the US equity market. But of course, again, all this is only made if the boys really want to sell today. Now, this is what I have for you in terms of the Hang Seng, and I told you on Friday that the market will likely cover the gap, and the market covered the gap beautifully. KSI and KRW, they gave the signal to sell. That's why you have the selling today. So all these technical, don't you think that it's incredible to have something like this? Okay, how low would the Hang Seng go? Well, let's talk about the low here first. That means that the next time that the Hang Seng go down to below 17,000, maybe this is where you should consider to book some profit. Okay. Now Nikkei, let's take a look right now. Now Nikkei is now hanging there because it has a benefit of the stronger dollar. There's a yen is coming down, but if the global economy, the equity market is coming down, it will also be affected. Now both KSI and KRW incredibly is still firming the base. So you can see that that's why the market has downside selling, but it can manage to stay the base out. So the downside now will be at 26,394 for today. Alright, and the upside potential can be MLP at 26,843. Okay, so traders watch out for this. Now DEX will not be ready until later, but DEX today is a CCYR, hence therefore I believe DEX is going to come down all the way here itself. I suspect that DEX will come down to 11,862 later today. Okay, I suspect that. KSI and KW are both fighting each other, so they are not going to give you a very strong signal here, but watch out for this. It is very possible, and that's about 11,862. Now crude oil, my goodness, crude oil on Friday, after we said that it will go higher, it went all the way up to $92. Look at it, 3 days, right? 1, 2, 3. Within 3 working days, the market hit the BNB RL extension by 1x1, and again, this has proven to people that my calling, the system that I have, is really spot on. All right, so if the market cannot it's trying to now, there'll be some profit taking, that's for sure, but I suspect that after a while later, when it finds strength, it move up to the 96 level, because this is what the market wants to potentially go, and of course we are saying that it might be going there itself. Both KSI and KRW are both in the positive shade, so this support at the moment now is below 2, so a bit of support about selling is expected, but once the market goes above $91 again, I'm quite sure we're going for the $94.39 later today or tomorrow. Okay, now let's look at the gold market, shall we? The gold market. Now gold market today is coming off, the pivot 2 is 1689 and it's now trading slightly lower. Okay, now it's below MLP at 1703 and the MA30 is 1683. So if I were to sell right now, right, I suspect that you'll come down to 1683 first. Okay, alright, first, and then we see what happens later on. But on the flip note itself, right, okay, if the market continues to sell down, 1660, it is very, very possible. All right, now fundamentally, gold is likely to go down because the dollar is going up. But of course, again, there are some people saying that it could be a speculative hedge for the equity market. I don't buy that, because you look at the chart for longer term itself, right, until the point where the dollar start to come down and equity market also came off, then usually they could see a reversal. But at the moment now, I don't think so. Yeah. Now, of course, silver is doing a very strong job itself, trying to stay above 20, but now it's trading below 20 and getting self support around this area. Now, of course, at the moment, this is the technical level whereby you need to have some technical knowledge or interest in this. So, as long as silver stays above 1960, right, it should be fine. The KSI and KW are all supporting it, so which means that the upside potential is definitely there. Okay, so that is gold and silver. The last two will be Bitcoin and Ethereum. Now, of course, we've been saying Ethereum for the longest of time. I said that it will hit the 1397. It did below the BNB RL 2 days ago, but it managed to stay afloat. Well done. Okay, so now the upside is the market here. The next thing will be 1397 for Ethereum. I suspect that once it crosses here, we can see it. But of course, if the market get resisted by the BNB RL, then the downside could be as low as 1260. Okay, 1260 is the low end. Now the BNB downside could be as low as 1192. So traders, watch out for this. This is really something to take note of. Now Bitcoin, Now Bitcoin has already hit the BNB extension at this 20,411 and now has pulled back as what we have mentioned again. So now the market is resisted at this RL level, and that is about 19,646. So if the market goes down below, which is happening right now, below MLP, below MA, then the first target it will be going would be this point, and that will be this 18,881. Okay, this is really something that you have to take note of. So traders, watch out for this and see whether the Bitcoin choose upside or choose the support level. Okay. All right. So before you go, it's all right, guys. I want to tell you this once again. I'm pretty scared that whatever may happen could happen. And of course, if this one it really happened, this 2 point, please try to capture it as much as you can, and then let's benefit together, and we can do some charity by the end of the year. Okay. All right. This is Cal signing off. Have a great day. Bye bye.